Ooh, boy. Mm, boy. Woo. Make sure my audio straight. Arp, arp. All right, the audio is straight. So we finna get on into it. Yo, what's good, everybody? It's your boy Jay Davari, bringing y'all another live stream. Welcome to another episode of my D.N.T series, my Diary of a New Trader series, and this is episode three. Episode three, I'm basically just gonna be reviewing a demo execution that I did this week. In my previous live stream that I did, uh, I want to say it was Tuesday night or Monday night. It was Monday night where I did a previous live stream outlining like what I was looking at this week as far as like looking for execution in the market. So, uh, today is Friday. Today is the 17th, and so basically, I'm just gonna go over the position that I took and how I managed the position and how I'm actually gonna go ahead and like put this inside of my journal because journaling is something that's very important as far as like tracking your development as a trader and also too like just refining your strategy, seeing just noticing certain patterns that you do and everything of the sort. So um, I got my Notion journal here. I got everything ready to go so I can like add it in and everything like that. Also got the Forex Factory, the economic calendar up right here also, so I can show y'all like why I was looking to take an execution this week specifically. As you can see, we have a few Red Folder news events that went on this week. You see we had two of them on Tuesday, we had three on Wednesday, and then Thursday we had three as well. And Friday is, pretty much wasn't a very volatile day today. The market is actually closed right now as I'm talking to y'all and doing this live stream. But basically, this week I was looking to enter into a position on the US 30 in my previous live stream. That's why I was looking to uh, execute a position. And so with my strategy, I'm more so of like a swing trader. So like um I'll enter in a position and pretty much I'm just looking to manage that whole position throughout the week. I'm not looking to necessarily get in and get out super fast like a scalper or like get in and get out the same day as far as like a day trader. I can do that because as far as the day trading, I can get in and out within one day. However, especially because of like I did try a couple of futures prop firm challenges last year in 2024, and I did pass one, but I never was able to get a payout, because just made some mistakes and or just had some bad luck during that time. But um, I did kind of have to like modify my strategy around the rules of like futures prop firms. So now I kind of find myself sitting in between day trading and swing trading, because with futures prop firms, they want you to be out of positions as soon as before market closes. So it's like most futures prop firms won't allow you to swing trade, and kind of sucks I wish we did have a futures prop firm that does allow swing trading. I know of one, and that's the one that I tried the account with, but I'm kind of just like, I don't want to pay all that money for that. But so I did kind of like have to tweak my strategy a bit, or my entry model around that. So, but basically, how I do that is I look to enter in Asia session. So this week specifically, I was looking to see what do we do on Monday, and then depending on what happened on Monday, right, that would basically let me know. I would just take a look at it and be like, okay, is there anything that I see that's occurring before Tuesday and Wednesday that tells me like, hey, this week we should expand higher, right? And when I get into the actual trade execution, which we're going to go ahead and do that now. So as you guys can see, this was right here. This was the position that I took, and just to confirm that I actually did take this, I'm gonna go to the paper trading model, and let's see, where do I go? History comes up. So where would I go to find field orders? Field. I don't even know but here we go. All right, so right here, right? As you guys can see, this position closed today at 10:32 a.m. this morning, the 17th of Friday, January 17th. So this trade execution actually went ahead and hit take profit. The take profit up here, as you guys can see right there, for a realized profit of $4,000, right? $4,000 in demo profits. Nothing wrong with trading demo. You know what I mean? Like trading demo until February rolls around, right? So that's just personally what I decided to do. But as far as this position, you guys can see realized profit of $4,000. So my entry was right in here in this area. It was a market execution around Monday night. So I told you guys, like, I want to look to enter into Monday's Asia, going into Tuesday's London, and based off how I trade and my entry model, everything lined up perfectly for me to actually go ahead and enter in on Monday's Asia, going into Tuesday's London. Because with my style, I'm cool with getting in the market and just going to sleep and then just managing it the next day. You know what I mean? I feel less anxious executing or being in the market that way. If I'm sitting there watching the charts for like an hour or so, because I've tried scalping and the day trading thing, like sitting in front of the charts, I just can't do it, right? I've tried it for a couple years and I just couldn't. I would just be so anxious and I would lose focus. But trading this particular way, it allows me to stay focused, and also too, if I need to step away, I can be cool just stepping away and already having it in my mind that, like, okay, whatever happens, right? I'm already in the market, so now just whatever happens, right? So, I'm gonna close this down right here. So, as you guys can see right here, my entry model. So the reason why I went long on US 30 is because from a weekly perspective, right here, you guys can see we have a divergence between two correlated assets, right? So the SMT is something that I learned from ICT, Inner Circle Trader. It's basically called he calls it the smart money technique. So basically it is when two correlated assets, so in this case the S&P 500 and the US 30 or the Dow Jones, these are two correlated assets. So when the ES is going higher, the Dow Jones should also be following suit because they're both correlated, right? However, when we have a divergence, so that means that one goes higher but one goes lower, right? That's a break in the correlation. So that tells us that there's some sort of institutional sponsorship in one of these assets, right? So there's some sort of institution or entity that has entered the market and they're looking to basically either grab up orders and take the market either higher or lower. But in this case, ES, or so an example of that, or what I mean by that is when we have this weekly low right here from Monday, November 4th to 2024, the ES, when it got to this area, this week, when it got to this area, it didn't head below. It actually wicked and headed higher, right? Whereas with the Dow Jones, this same weekly low from Monday, November 4th with the ES, the Dow Jones, it actually went below this level, and it also wick and started hitting higher. So this right here tells me that there's a divergence in the market. So there's some entity or hedge fund, large bank, institution, whatever you want to say. There's smart money that's effectively made its way into the market, right? Or has gotten involved in one of these assets, right? And when I go down to the lower time frames, you guys can see. I'll show y'all what I'm talking about. But so initially, when I seen this divergence going into this week, when I seen the divergence, when I noticed the divergence, so I had marked this area. This area right here is basically liquidity, right? So there's like resting orders beneath here. So there's buy orders, but there's sell orders right here. And the smart money or the large institutions, how they trade is they basically have pending orders that are right here, and when these areas get tagged, they basically mitigate all of their positions, all of their selling positions, and then they replace them with buy orders, right? So that's why when we got to this area, we reversed, right? Because these sell orders right here, they got tagged, they quickly sold them all, and then replaced them with buy orders and buy executions, effectively taking this market higher, right? So I have this area marked as an external range liquidity because this is a long-term low, right? So my next target was going to be this area of inefficiency right here, which is, I have this marked as internal range liquidity on the weekly perspective. And internal range liquidity, fair value gaps is basically the same thing. I just mark it as an internal range. But essentially this is just a fair value gap or a CB, so a sell side imbalance, buy side inefficiency. So sell side meaning that over the last couple of weeks we've headed lower, right? So we've delivered sell side to take out this low. And so how we get back to fill this inefficiency, we have to have buy side delivery. So we have to have buyers and buying orders put into the market to effectively fill in this inefficiency right here, or this gap right here, which is exactly what happened this week. Especially too, looking at it like this, as I look at it now, this also was basically kind of telling me that at some point we're going to have some type of retracement, because we've had nothing but consecutive bearish candles, consecutive down candles over the past couple of weeks. So at some point we're going to see some type of retracement. So that also in itself is another like indicator that, okay, if we're going to do something this week, or if there's some type of retracement that's going to happen, it's most likely going to be this week, on top of like all of the news events that we had going on this week also. So we had a couple things. We had with CPI, PPI. We also had unemployment claims. So yeah. So I'm gonna go down to the 4-hour chart, because the 4-hour is the correlated time frame. Also, another thing that I use inside of my entry model, I use Sunday's opening price for the week. So I use Sunday's opening price as a way of gauging, okay, do we have any, based off of where we are right now from market open Sunday afternoon, do we have some sort of inefficiency? Do we have like some sort of like high time frame key level? So like, do we have like a low, old low or old high? Do we have any type of inefficiencies resting below or above Sunday's opening price? So in this case right here, the Sunday's opening price, January 12th, 2025, our high time frame key level is this weekly low back from November 4th of 2024, right? So this area also created the divergence that I talked about earlier, the S&T. So below Sunday's opening price right here, we had S&T divergence. We had divergence between, or at this previous weekly low right here. So that basically tells me also that, okay, if we see any type of like reversal pattern, right, most likely, or I'm going to lean towards, okay, we're at this higher time frame key level. So now where's the next potential area that we can trade to? And as you guys can see, that area was that internal range liquidity from the weekly time frame. All right, this is that same inefficiency right here, just on the lower time frame, right? That's why I have it marked this way, right? And the reason why I wanted to target this area was because at this internal range, from a weekly perspective, we have that same weekly high right here. That is also a form of liquidity right here. It's just on the lower time frame. So if I go back to the weekly time frame, you guys see this right here can also be considered a liquidity rate. And that's really all a fair value gap is. It's just the fair value gap is just an area of reference that identifies a type of liquidity rate, right? So even if I were to mark it as a fair value gap, if for people who may be watching this that are like stumbled upon ICT concepts, so even if I do put a fair value gap right here, yeah, you can see to tag the fair value gap, it has to raid this high, right, to fill in this sell side imbalance, buy side inefficiency, right? So this is a form of a liquidity raid right here. All right, so let's get rid of that. Go back down to the 4-hour time frame chart. Most of my executions are also off of the 4-hour and 1-hour charts. I rarely ever go down to the 15 unless I'm like looking to find like a smaller or better entry if I don't see anything that's clear on like a 4-hour or 1-hour chart. But in this case, I entered on the 4-hour chart, and I actually entered, I want to say I entered, like I said, I entered in Monday's Asia session. So it was mostly on market execution. But once I kind of seen that divergence already take place, I was already kind of sold on like, okay, I want to see price go ahead and head higher and tag this inefficiency. So I basically just did a market execution. But if I didn't do a market execution at on Sunday's Asia, what I would have did was I would have looked to put a pending order, a pending buy order, right here at this inversion fair value gap, because as you guys can see, also as the week when we opened up on Tuesday, we went up, went higher, and we came back down to tag the top of that inversion fair value gap right here. So this inverted inefficiency right here, this can be seen as an area of support, and that's what helped drive prices higher. And I actually remember looking at this too while I was on my way to work, going into Wednesday. Let's see, on 1 hour. So Tuesday we kind of ranged out, but we came back down and also tapped into like an order block. Let me go ahead and go into that real quick. So the reason why I have this as an order block is because this was the candle that created the S&T. This one down here. This is the one that rated. Actually, no, it wasn't. This is the one that created the S&T. This is the one that rated that low. And as you guys can see, I'll come back right here. So this is the candle that created the S&T, or that ran this low. And also it ran these short-term lows resting right here. So it ran these short-term lows right here. Ran those. I drew that kind of funky, my bad. But this candle is what rated those short-term lows right here, and also rated the long-term low back in November. And as you guys can see, on Tuesday, it came back and tagged that same order block, right? So this notifies us or tells us that there's a change in the state of delivery of price. So instead of delivering sell side, now we're offering buy side. So now we have buying orders that are being input into the market and being executed upon or being placed. So there we go. We got that. So that could have been an entry area right there. Me personally, I went ahead and got in this area. Like I said, I did a market execution Monday night in Asia session. So it was between 6 and I want to say this is 11. 18, so 6. No, this is 10. So 18 is 6 o'clock military time. 22 is 10 o'clock. So it was right between 6 o'clock and 10 where I did do a market execution, and my risk to reward was about almost a 1 to 2. Eventually, when price did hit higher, I did also just go ahead and like move my stop loss up a bit. I didn't mark that level, but I moved my stop loss up a bit to decrease the losses that was already gained, especially because we moved so far away. As you guys can see on Wednesday, as a matter of fact, at like 6 a.m., we had went ahead and like just completely just gapped up, right? And when I seen this on Wednesday, I thought to myself, okay, we're most likely going to tag this area this week. And so from Wednesday, we shot up, right? And then we kind of ranged out. Thursday, we just mostly ranged out. And then going into Friday is at this point also right here, right? Part of the trade management in my strategy, right? Or my entry model. So if I see any type of retracement back towards Sunday's opening price, that tells me that I'm most likely wrong, right? So the fact that I didn't see any type of retracement back down anywhere near Sunday's opening price down here, that told me that basically just gave me confirmation and confidence to remain in the trade, because we also have a bigger fair value gap right here. So even if I did see any type of retracement, maybe say like a Thursday, we came down in here, because we have this inefficiency right here, I was still gonna be confident enough to hold a position and be like, okay, we have this inefficiency right here. Most likely we're gonna accumulate orders in here, maybe have a bit of manipulation right in here, and then head higher, right? And then go ahead and tag the area. However, in this case, that did not happen. Like I said, Thursday we kind of ranged out, and Friday, at this point also with Friday, right, when I didn't see any type of retracement back down into the gap right here that was formed on Wednesday, that kind of also gave me more confirmation that, okay, most likely this area is going to be hit, because whatever expansion there is left to do on Friday, there is left to do in the week, is going to be done on Friday, right? So because we didn't have any type of large move Thursday happen, right? I think most likely Friday is just going to be a continuation of what happened Wednesday, right? So that was kind of my thought process and my trade management throughout this execution, as I was looking at it periodically through the day while I was at work. And it's like how I manage this demo trade, that's also how I would manage a live execution trade, whether it be on like a funded account or be like on a personal account. Regardless, trading demo and then trading live is kind of really the same thing. I know people have mixed different opinions about it, like, trading live isn't the same as trading demo, but since I started trading demo and went away from live a bit and actually took a little bit of time to play with demo, that's actually where I've seen the most growth, me personally, because it's like once I removed the attachment away from the money, right, I was able to focus more, right? So now I can look at it as far as like, okay, demo live, regardless, the process is still the same, right? I still have to execute and manage my positions and follow my rules the same on demo, the same way I would need to do it in live in order to essentially just, be profitable and like just essentially just be profitable, right? Nobody in the live chat, so I'll put that away. But so there we go, right there. That's basically how I manage this trade position this week. Another thing, I also need to journal this position, so I'm gonna show y'all like basically how I journal. Right here using Notion. So I kind of want to get this lined up just enough to where I can clearly see it. Let's see. How do I want to do this? Kind of slide this over a bit. There we go. All right, and up here, right here, this little camera tool on Trading View. If you guys use, for anybody who uses Trading View, this little camera tool, you just take a snapshot with this right here. Take a snapshot, download image. It's gonna download that image for me. It'll probably pop up on my desktop area, but it's gonna download this image for me. Yep, it says it right down here. So now I'm gonna go to my Notion journal. And as you guys can see, these news events that went on this week, they kind of caused those moves. So that Wednesday, that 8:30 a.m. news event kind of really shot price up, or give us that volatility injection right here. If I go to an hourly, it'll probably look a lot clearer right here. Let's see. Yep, 8 o'clock. 8 o'clock right here. This calendar right here at 8 o'clock. Calendar right here at 8 o'clock. This one right here. I know I'm kind of going off topic a bit, but is it gonna turn red? There we go. I did the wrong thing. All right, but right here, this 8 o'clock calendar right here. Wednesday, we had that that news. We had that red folder news event, CPI. The actual actually came out less than the forecast. See, actual greater than forecast is good for currency, right? So that means that the US dollar started tanking a bit, and that's why we saw the bullishness inside of US 30 and all the other assets, as far as like equities markets go, S&P, NASDAQ, Dow Jones. So because the CPI numbers came back worse, and so that's basically bad for the U.S. economy. So it's kind of weird explaining economics. You know what I mean? It's something that you kind of do have to try to study a bit, you know, and get the hang of. But yeah. So from 8:30 and on Wednesday we had that was that volatility injection that we needed right there. Also, one quick thing before I do go into the journaling aspect of it real quick, something that I did want to show y'all. So this area right here is also another confirmation that this basically told me that, like, okay, we're most likely gonna head higher, right, and tag the inefficiency right here. But right here inside of this area right here, you see all these consecutive candles that we have right in here. So we have all of this commotion, if you will, going on right here. If you know anything about the accumulation, manipulation, and distribution models, it's also something that ICT is taught. But this area right here, where all this basically indecision is going on right here, this is basically accumulation. So there's some type of entity, institution that's in this area. They're accumulating orders, right? They're accumulating orders. And while this is going on, eventually there was a manipulation. So that manipulation, right, that selling inside of this area, because that selling that led to a liquidity raid, which ran this weekly low right here back in November. So this manipulation right here, and remember, those sell out orders that are resting here, they're being liquidated, and now that institution or hedge fund, large bank entity, whatever it is, whoever has that like the big money, the smart money, now they're distributing the sell orders. Now they're distributing buy orders, right, from the sell orders that took place here, because basically for the market to move, you always have to have an equal amount of sellers and buyers, or not necessarily an equal amount of sellers and buyers, but you need to have an equal amount of orders in the area. So there could be less sellers here, but more buyers here, right? And that's basically just gonna trigger price to head higher, right? That's the way that, well, it's kind of my watered down, butchered way of how ICT explains it. But if you guys want to look at or understand how he reads the market, you can feel free to like type it in on YouTube and go find it for yourself. But so we had that accumulation, the indecision right here, had a manipulation that also took out that weekly low, and then we had a distribution of buy orders to go ahead and tag that inefficiency for this week, right? So that's that. Now I'm gonna just go ahead and go into journaling. I personally use Notion. I personally use Notion as my journal. The layout that I have, I basically found it on YouTube. So if this is something that y'all want to copy, you can find it on YouTube. Everyone has their own type of like layout that they use, but yeah. So I'm gonna go ahead and put it in. So we entered Monday night. End date, it was 17th. I do the time. I'll go ahead and do the time. So Monday night, let's say PM. Oh shit. PM. I'll just do like maybe 9 or so, because either way it's Asian session. And then today it closed at and then today it closed at 10:32 a.m. because that's what was shown earlier. That's what I showed earlier as far as like the execution that I took. And so we have that. So there we go. Account. I don't have a demo account set up for it. I just logged the trades that I did take. And yeah, so direction, it was long. Emotion, I was cool, calm, collected, not too anxious. Cool, calm, collected, right? Not too anxious, right? I'm not sure what. Nah, I ain't gonna do that. Profit and loss, we made it. I'm just gonna say $4,000. $4,000. It's like I think 4,067 or something like that. Like the same thing here. Because if I were to put right here what account it was in, it will basically go in and calculate, and I can see like, okay, how much profit or how much return have I had on said account. So I can set it up that way. But I currently don't have any type of funded account right now, so that's why I'm not even worried about it. RR, we're basically gonna say 2 to 1. Just gonna say 2 to 1. Boom. And result, it was a win. We got the dub. Right? Got a property. Nope, not that. Got a comment. So this is where I attach that file. All right, so this is where I attach that file. There we go. I attach that. Yeah, see, boom. So if I want to go and review this later, I can, right? And then I'll leave a little comment. Preferably, I want to leave it underneath it. I don't think it'll let me, so I'm gonna just go ahead and type it out. This week I took a trade. This week I took an entry on basically NYM futures, whatever, US 30, Dow Jones, NYM. The entry or the trade execution. Should I spell execution wrong? Whoops. Hold on. There we go. Execution was was formed around S&T divergence at a weekly key level and a weekly key level between both US, let's say MIM, YM, shift, and ES. Target was weekly IRL or internal range liquidity. And there we go. So I hit this and boom, there we go. There's my comment. So I know why I took the position and I know what I'm looking at. So I know why I took the position, right? And yeah, so, oh, also I'm gonna add this too. If it lets me, shit. Can I edit the comment? Okay, there we go. All right here. Entry was market execution. Spell execution wrong again. What the hell is wrong with me? Execution was market execution. Order not limit order, although there were potential areas of interest or AOIs, interest, although potential area of interest for other entries, IES. Boom! There we go. All right. And there we have it. So now I can go and look at this later. Let's see. This it? Nope, that's not it. This it? Yep, this is it. I should probably also start adding the dates in here also. Yeah, I'm gonna start adding the date in here. So 1/12/25 through 1/17/25. Oh shit, /25. There we go. All right. Yep, that helps out a lot. There we go. I should start putting the dates on. So there y'all have it. And then it'll show me the week that I took this trade, and I can go back and click it here, and boom, there we go. Right. So there y'all go. That's how I journal. I hope I did a pretty good job of explaining my entry model and basically how I just managed the position that I executed on this week. So yeah, I hope I did a good job of showing y'all like how I do it. If anybody learned anything from this video or from this live stream, you know, you're welcome. And glad I could help if you did learn anything. So with that being said, I don't really have anything else that I want to talk about. So I think I'm gonna go ahead and end the live stream here. I do plan on either Sunday or Monday, because Monday is a holiday and it's also Trump's inauguration day, so the presidential inauguration day. So don't really expect there to be too much trading going on Monday with it being a holiday and everything. But so I might go ahead and do a live stream there doing like a market analysis. And so yeah, but there y'all go. If you stayed this long, if you watched a stream, you know, you stayed this long, I appreciate it. Like I said, if I helped anybody out, you know, just showing y'all like what the process is, you know, it's something that we all do. Even professional traders, you know, they journal, they write things down, and they even go back and look at past executions and everything. So just doing what the professionals do, and that's going to help you become more consistent and actually help you as far as like developing consistency, and also just get you in the pattern of you know, really treating it like a business, right? Because you know, stuff like this is I would say this is kind of the boring part of trading, right? Journaling, going back and reviewing and everything. Like this is the boring stuff. The fun, exciting stuff is like making the money, you know. But as far as this right here, this is like the work that goes behind the scenes, right? So to make y'all or show y'all and allow y'all to like really just be a part of this process and seeing it for like what it really is, you know. Um, it's kind of therapeutic for me, right? It's because I feel like I'm teaching and I'm helping somebody along the way. So that's also why I started this series, right? The show everybody that starting out, whether you started out or you've been doing it a while, you know, or you're seasoned in the industry, right? Like this real deal is the process. Like this is authentic. This is real, right? You know, no flashy Instagram, YouTube video things yet. So at least not yet. You know, in the future, I do plan on doing stuff like that. You know, the better and better I get, and you know, if I do eventually, you know, start getting a subscriber base, a fan base, you know what I mean? Hey, the sky's the limit. But with that being said, y'all, this is Jay Davari. I'm gonna sign out, and I'm wish y'all a good weekend. Y'all be safe, and I'll catch y'all in the next one. Peace out.